Welcome back to Alpha Recap. Thanks for joining us. The market day just wrapped, and we've got a lot to unpack. Inflation prints, bank results, an oil bump from geopolitical headlines, and more AI complexity than you can shake a model at. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. So, what really stands out here is how many different forces moved markets at once. It wasn't one story. It was 3 or 4 things all at once.
The headline that kicked this off was June inflation, headline consumer price inflation, came in at about 3.8% year over year. That was helped in a big way by gasoline, which fell roughly 10% for the month, one of the biggest monthly drops we've seen in about a decade.
Right. And the market reaction was pretty clear. We saw a NASDAQ-led advance while the Dow lagged. Growth in AI names outperformed, while more cyclical parts of the market were mixed.
Exactly. But 2 quick caveats here. 1, that gasoline drop mechanically pulled headline inflation down. 2, core inflation, which strips out food and energy, stayed kind of sticky. So relief at the headline level, caution underneath.
I mean, when you step back and look at this, headline CPI provided a near-term reprieve, but it didn't suddenly settle the Fed question. Traders cheered, but economists and analysts were more measured.
Speaking of cheers, big banks delivered bigger than expected quarterly numbers today. JP Morgan reported non-GAAP earnings per share of 6.14 and revenue of $58 billion. That revenue number beat estimates by about $6.7 billion. Bank of America said second quarter profit rose about 27% year over year.
And the mechanics were important. Higher rates lifted net interest income, trading revenues were helped by volatility, and deal activity supported fees. Analysts flagged that part of the beat could be cyclical, tied to an especially busy quarter in markets. So people are parsing what's repeatable versus what's transitory.
Right, and some of the bank disclosures had a bunch of detailed metrics. A few specific numbers were listed in filings and presentations, but investors were told to consult those materials for the line item context. So, yeah, strong prints, but not a closed case on durability.
And then there's oil. Geopolitics re-entered the equation. Reports of U.S. Iran strikes and developments around the Strait of Hormuz pushed crude higher. Brent finished near $87.90, WTI near $82.59, both up roughly $3 on the session.
That move reintroduced an energy risk premium, which has a second-round effect. Higher fuel costs can feed back into inflation and pressure transportation margins. So even though headline CPI dropped, a spike in oil could nudge inflation back up if it persisted.
Yeah, that tracks.
We should also talk about some name-specific volatility. Lucid had a dramatic intraday swing. An alleged bankruptcy or go-private report ran in the media. The stock plunged nearly 50% intraday, and the company denied the report. But the episode left liquidity and disclosure questions in the air.
Not a great day if you were holding that name. Those rumor-driven moves can be brutal and remind traders to mind liquidity and position sizing.
Totally. On a more cheerful note, Transocean reported revenue of about $1.1 billion and earnings per share of 9 cents, and its shares traded up to about 5.39, up roughly 23% recently on that momentum.
And then there's Poet Technologies. Analysts pointed out an estimated cash position of about $830 million and framed the company as exposed to AI capex trends. Long-term allocators were paying attention to that cash cushion in the context of AI spending plans.
Which brings us to the third big theme. AI is a real growth narrative, but it's also becoming a cost center for some firms. Fed Chair Warsh commented on AI-driven shifts in the economy that fed into the growth narrative and helped tech leadership. But voices like Chamath Palihapitiya warned about token-based cost pressure, saying exposed firms could face 25 to 36% margin pressure in certain scenarios.
So what really stands out here is the duality. On one hand, AI investment supports productivity and revenue opportunities. On the other, if your model requires buying tokens or paying usage-based fees for models, that can add up quickly and compress margins if not managed well.
Yeah. Chamath used examples like exposures of about $135 million and scenarios where token pricing might be the equivalent of just $1 per unit, which would dramatically change economics for some business models. So analysts are saying procurement, contract design, and vendor negotiation matter more than ever.
Honestly, I was a bit surprised by how much attention that got today. The industry is realizing that huge AI workloads have real variable costs. It's not just capex, it's ongoing consumption.
Right. Another thread was market breadth versus concentration. The Nasdaq led the day's gains, but internal participation was uneven. Select megacap tech and AI beneficiaries drove performance, while broader indices showed patchy involvement. That concentration raises some caution, even when headline indexes are up.
Big move.
Let's hit the key debates analysts disagreed on. First, is the Fed set to pause or pivot? Some analysts said the headline CPI print supports easing expectations. Others pointed to sticky core inflation and urged caution. The takeaway? Policy bets remain sensitive to the next prints and Fed commentary.
Next, is AI a growth accelerator or a margin sink? There's clear consensus that AI reshapes investment priorities. But some think productivity gains will dominate, while others warn tokenized consumption could be a nasty profit headwind for exposed firms.
Third debate, are bank beats a cyclical tailwind or a one-off? Today's results showed momentum, but analysts are parsing recurring net interest income versus episodic capital markets fees. Sustainability is the question.
Fourth, the advance masked concentration. Analysts noted megacap leadership even as overall breadth lagged. So, even on an up day, risks remain.
Let's put this into plain English for different investor types. Growth and tech-oriented investors saw renewed leadership for AI-enabled names as headline CPI cooled, but they should watch token exposure and unit economics closely. Financials-focused investors saw supportive bank earnings, but should separate recurring margin improvements from one-off trading gains. Value and energy investors were watching an elevated oil risk premium tied to geopolitics. Event-driven traders saw opportunities in name-specific shocks like Lucid and Transocean. Long-term allocators were focused on balance sheet strength and cash flexibility, like that Poet example with roughly $830 million in cash.
Right, and for risk management, the practical playbook is straightforward. Monitor sequential core inflation and personal consumption expenditures prints. Watch the composition of bank revenue going forward. Scrutinize AI contract and token disclosures in filings. And stay alert to geopolitical headlines that can reprice oil and shipping.
And a few tactical things to watch in the weeks ahead. The next core CPI and PCE readings, upcoming bank earnings cadence and loan loss provisioning, any more headlines around token pricing or major vendor contracts, and developments in the Middle East that might affect oil flows. These will drive whether today's relief turns durable or gets reversed.
Right, quick reactions.
Wow.
Not great.
Okay, before we sign off, let's hit 3 clear takeaways. 1. Headline inflation eased thanks to a big gasoline drop, but core inflation remains sticky, so the Fed narrative is unresolved. 2. Bank results were solid this quarter, giving the sector momentum, but analysts are watching whether revenue sources are recurring. 3. AI is both a growth story and a potential cost pressure. Tokenized or usage-based economics could compress margins if not managed.
And, as a reminder, there are always idiosyncratic risks. Rumor-driven spikes like the Lucid episode, and geopolitical moves that can quickly reprice commodities. So selectivity and active monitoring matter right now.
That's our recap for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. See you next time.
Take care, everyone.